Hello and welcome to Telluride Real Estate News. I'm your host, Robert Stenhammer, broker associate with Telluride Real Estate Corp, Christie's International Realty. And today I'm going to give you my tips for maximizing the return of your Telluride short-term vacation rental property. And I'm welcoming U.S. Bank loan officer Tim Cannon to talk about what's going on in the world of financing property. You've invested in a Telluride property and you've chosen to share it with others by offering it for rent in the short-term vacation rental market. Great move. You have many options to choose from. A professional management company, or you can rent it on your own through platforms like VRBO and Airbnb. Regardless of how you choose to rent your property, be sure to do an annual checkup of important strategies to maximize the rental return on your investment. The components of this analysis should include a management and performance evaluation, a marketing and pricing review, and an appraisal of the property's condition and needed improvements. Completing this review annually will allow you to more fully enjoy the use of your rental home as well. If your property is professionally managed, and there are several excellent rental management companies in Telluride to choose from, make sure you are satisfied with your current rental management company's performance. With so many good rental companies to choose from, you can afford to be picky about the company you and your property are partnered with. If it's time to change your management company, look for a company that is focused on providing 24/7, 365 promotional marketing, bookings, and guest services. Your new company should give the best possible expert care for your property and specialize in executive-level homeowner service and communication. Owners who are making reservations and managing properties on their own should review their property's performance versus prior years. Metrics here to look at should include the number of nights rented, the average daily rent paid, and total income net of maintenance and housekeeping expenses. Identify the time periods that your property did not rent and address your pricing and marketing targets accordingly. Now, today's internet-driven world allows owners to easily book and manage properties on their own. However, many owners underestimate the amount of time required to self-manage and are realizing that their time is just better spent on other things. An effective rental management company can greatly ease the burden of owning rental property. Also, a professional management company will establish a year-round strategy to promote and book your property. They will compare your property's pricing to similar units and decide how to break out pricing seasons, yield management stay restrictions, and seasonal targets like families when school is out, skiers in the winter, and hikers, golfers, and festivarians in the summer. Your property needs to have its own competitive advantage. Is it newly updated or renovated? Does it compete on lower pricing and value, or does it compete on quality? Does it come with extras like ski passes or gaming systems that help set your property apart? Guest reviews of the destination and their accommodations can provide powerful word-of-mouth advertising that can differentiate your property and make a large difference in the amount of bookings you receive. Of course, properties today should have large-screen HD TVs in the living rooms and bedrooms, updated kitchens, bathrooms, and bedding. Fast and dependable Wi-Fi to support multiple devices is also critical. Assure to complete an annual maintenance punch list and solicit feedback from your rental manager and your guests to communicate potential upgrades to you that will allow you to maximize your rental income and the enjoyment of your Telluride rental property. Please contact me for questions about your Telluride rental property. And up next, our special guest is U.S. Bank loan officer Tim Cannon to talk about what's going on in the world of financing property. Hello and welcome to Telluride Real Estate News. I'm your host, Robert Stenhammer, broker associate with Telluride Real Estate Corp, Christie's International Realty. Our guest today is Tim Cannon with U.S. Bank. He is a mortgage loan originator. And Tim, welcome to the show.
Thank you, Robert. It's nice to be here.
Tell us a little bit about how you arrived in Telluride.
Wow. I mean, it began in 1985. I was 22 years old. And I was really attracted to Telluride in a similar way that my parents were drawn to Aspen in the 40s. And I had some experience skiing in Aspen and some time out west on family vacations. And it was described to me that Telluride was the up-and-coming place.
Awesome. And so you've been with U.S. Bank for a while, I think, and then you also have real estate broker experience, which I think would help in your loan duties as well.
Right, and as you know, Robert, it all begins with an appreciation with people, and all the different interactions we have, whether it's the local members or second homeowners or investors. And I've always had an interest in real estate, and so that began with 4 years with the Telluride Real Estate Corporation from '85 to '89. At the time, that was owned 75% by the Telluride Ski and Golf Company.
Indeed.
And so arriving at that point in time was very interesting because the first roads were being cut into the village. In fact, when Steve Hilbert took me up for a tour in the Mountain Village, we got stuck in the mud on Mountain Village Boulevard. And then several other neat stories are attending and manning the first open houses in the village, which the very first ones were held at Telemark condominiums that had 3 units at the time. And then Columbia Place was the next stop, Kayenta Phase 1, and then just proceeding over to what was known as La Chamonix.
Yes.
And
so you've seen this place grow up from its roots here in Mountain Village.
Totally, and a real love for skiing at first. I can't do that anymore. I can cycle, but my knees can't take skiing anymore. I've played that card out.
Tim, tell us about your role as a mortgage loan originator. What does a typical day look like for you?
Well, a typical day for most professionals now involves a lot of emailing.
Sure.
But importantly, it involves a lot of FaceTime with customers, time on the phone. It's a very paper-intensive industry, which probably doesn't come as a surprise to many people, particularly those that have gotten a home mortgage.
Sure.
It used to be that a mortgage loan officer could play many different fields in banking. A cross-section of residential needs that would span into even development financing. But now the mortgage lending is confined, I wouldn't say confined is the right word, but it really is focused on the consumer as its first focus.
Sure.
So it can go into...
In terms of protecting the consumer and making sure that, you know, the subprime stuff isn't going to happen anymore, or that people aren't getting gouged with high interest rates to purchase a property.
Right. There's just a certain level of documentation that's been standardized in the nature, in the industry. I think some of that, actually, in terms of trends, could be rolled back now, which I do think there needs to be a little bit more balance.
The pendulum swings, doesn't it? Yes.
It does, and I really, my focus initially was in consumer and commercial lending, so I could cross into many different areas. And now as a mortgage loan originator, which I've been with U.S. Bank now for a little under a year as a mortgage loan originator, I'm helping locals. We provide deed-restricted lending, which I've closed in the Mountain Village, Lawson Hill, town of Telluride.
Excellent.
So that's encouraging.
Excellent.
Always to be helping people that we live with
Nice.
year-round. But also that spreads out into helping more of the jumbo mortgage needs of our primary and secondary homeowners.
What percentage of loans that cross your desk are in the jumbo variety?
I would say at this time it's only about a third.
Okay.
That more of the volume comes from locals that have known me. I've lived here for 31 years.
I see.
And so my roles before were one of U.S. Bank area president for over 8 years, and then heading different loan operations in town for other banks. And so right now I'm dealing with people that need loans that are close to home.
Wow.
Very personal, and I find a lot more satisfaction in dealing with people on their home matters. particularly because people are interested in hearing some financial planning advice, understanding what their goals and objectives are.
Sure.
And we can structure a great many things with a home mortgage loan today that can run the gambit of a high loan to value, a highly leveraged transaction, which some people do need because of particularly locals, as they don't have the savings rate that maybe the high net worth people have.
Sure.
But yet they have the income. And so the trends I'm seeing here locally with so much weighting going to doing local lending is that the local economy is doing well. And that particularly in the construction sectors, real estate, and many areas of home services, that I'm seeing people's ability to qualify be stronger today than it was a few years ago.
Fantastic, and that's great for our community.
Yeah.
Well, you talked about some structures of different types of loans, and I know that there's a lot to that, right? I mean, you've got fixed rate, you've got adjustable rate, you've got points. I mean, what are some of the main structures of how you're doing business with financing?
Well, there's so many key drivers in a loan decision. And loan to value is one.
Sure.
Debt to income, as I said, is improving. Credit scores need to be in a range of people about 720 to 740 and higher.
Okay.
Though what we're seeing now is the government getting back involved and allowing people with lower credit scores be able to qualify again. This was particularly a trend that we saw over the last couple of years to try to give some relief to people coming out of the recession.
I see.
And so we were seeing credit scores acceptable at a 620 level, and even through FHA programs now down to 580. So people should not necessarily be afraid to pick up the process and start anew, because there's different avenues for people to work things out. And to get back to your question, I think with 30-year fixed mortgages were very popular, particularly when rates were at an all-time low.
Sure.
And we were seeing people being able to refinance at 3.4, 3.5%. Now they're up closer to about 4, 4.25 for a 30-year fix. So
still very attractive.
Very attractive when you look at the long term. And where we were even about 4 or 5 years ago, these are very low rates still. And then other trends that we're seeing is people are going back and looking at 10-1 ARMs. That's where the interest rate is fixed for the first 10 years before it adjusts. Some people that may even be looking at 5-1 ARMs, because not all people are getting mortgages for a 30-year term. The average home ownership period in this country is actually 7 years.
I see.
And so many people want a good priced mortgage, well-priced mortgage, to get them going, but they're going to make a decision in terms of for what period of time they really need that to be.
I see.
And there's also some rate advantages there, where some people are very sophisticated with rates. They may feel that they're getting a much better rate on a 5-1 or 10-1 ARM today. They get the interest savings during that period of time, and they're willing to accept the risk after that. Usually people like that are ones that have a higher level of liquidity or can find different types of financial structures, whether it's for their business needs or for their personal.
Excellent. How many buyers do you see that are trying to pre-qualify their financing before they actually look at property? Is that a common thing to do, and what do you think about that?
Yeah, it's very common for people of local income, like us, really trying to test the parameters and to see what products they can qualify, and also to position themselves for a contract or for a lottery. For example, with the Spruce House condominium projects in the town of Telluride.
Beautiful project.
Very well done.
And high demand.
And high demand. And Lance McDonald and other people in the community always deserve a lot of credit for that. Well, we saw 60 people go into that lottery. I pre-qualified 16.
I see.
And I'm actually doing closing on 4 of the 8 loans, which I'm happy
Great.
to do, and really met a lot of new locals, you know, in the process. But those 16 people, and there was many more, of course, that were working with other lenders that needed to get an idea of what type of programs they could do. For example, one person had the liquidity to get a 25% down loan, which for a condominium can take away certain add-ons that typically come with condominium financing. Other people were able to look at lower down payments, but they had the income. And then also this pre-qualification process just doesn't happen with lenders in this community. It has to happen with the Housing Authority and the Telluride Association of Realtors. I'm really happy to report that TAR gave many of these people $200 to $2,500 for down payment assistance.
I participate in that program. It's a dollar amount that comes off at closing.
And so pre-qualification, while important with a lender, I think is also important to have in terms of general conversations with the Housing Authority, with your financial planner, your spouse, you know, other people that are interested and really trying to collect opinions, some personal and some professional.
Awesome. So last question, what's the biggest news in the industry today, and you know, where do you see the industry going in terms of financing real estate?
Well, I see things continuing to open up. The biggest changes in the industry is in the back office. Consumers, with the adaptation of the Dodd-Frank Act, were really being impacted by slowdowns in the back office. What we also saw was a lot of appraisers get out of the business. So the ability for appraisers to complete reports within 30 days may be coming back. It's currently more around 60. That's affecting transactions. We're also seeing a voluminous amount of paperwork go to consumers, many of that repetitive in terms of initial disclosures, a regulatory closing disclosure statement that goes out 3 days before closing, and then the closing documents themselves. Many of those could total up to 300 pages. And so I really hope that what we're going to see as a trend is a stability in the regulations. I think these regulations were important not just to correct problems with over-aggressive lending, but I think the consistency of regulations is important for all size banks, and also to give some comfort to the consumer. I think when there's too much paper, the meat of the subject can get watered down. And I think that if we can tighten that a little bit, and I think we will, consumers will be better informed because they're not overwhelmed with so much documentation.
And I think that's where, you know, your real estate broker and your loan officer can certainly help wade through those details and, you know, bring the substance out of all that to make it make sense.
Yeah, and what we're seeing a lot more of too is electronic signatures. A big trend in the industry is to be able, the ability to upload information right to the cloud.
You bet.
And so we're going to be seeing less of this paper going back and forth, probably less of that duplication. We're going to see a streamlining of the information flow. But one thing we're not going to see a change in is people needing to deal with people. As much as there's this trend of people going to fintech type mortgage loans, what I see is many people want this face-to-face interaction. They want to be able to email or text back and forth, which I do a lot more of, because it's quick, it's efficient, but when it comes to very sensitive matters, contingencies that need to be worked through, exceptions that need to be mitigated, people need communication. They need communication, and they need a trusted professional to deal with. And so the thing I really encourage people to do while they're shopping around, it's important to have a mainstay banker, someone that they can trust. And that person, that professional also has to come up with the best commodity and the best value. I don't think that that should be overlooked. But I do think that it's important for people, even in this technology age, to really form personal relationships that are lasting and enriching.
Fantastic. Well, Tim, thank you very much for all the great information. It was truly a pleasure.
You're welcome, Robert.
I'm Robert Stenhammer, broker associate with Telluride Real Estate Corp, Christie's International Realty, and this has been your Telluride Real Estate News.